Ladies and gentlemen, good day and welcome to the Bikaji Foods International Q1 FY26 Earnings Conference Call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this call is being recorded. With this, I now hand the conference over to Ms. Hazel Rathod. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. Thank you for joining us for Bikaji Foods International Q1 FY26 Earnings Conference Call. From the management, we have with us Mr. Rishabh Jain, CFO, and Mr. Manoj Verma, COO. I now request Mr. Rishabh Jain to take us through the key opening remarks, after which we can open the floor for the question and answer session. Thank you, and over to you, sir.
Thank you very much for joining the call. From Bikaji lens, me and Manoj has joined the call, and we have seen a strong quarter performance with a strong 15% growth on consolidated basis and 11% growth on standalone basis. From last 6-7 months, we have seen good demand improvement across each month on month. If you see a third quarter of last year, we have been at 5-6% growth versus last quarter was good, and this quarter on month-on-month basis, we have seen good demand recovery across each rural as well as urban. Also, we entered into a festivity, and festivity is always big for us. Big sweets play an important role, and we just closing July, and this we've seen good demand from from sweets as well as all ethnic snacks perspective. We've seen good demand and see good sign of good second quarter going on. From bottom line perspective, this quarter we have seen one of the best quarters in last many quarters, where overall from consolidated lens, we are at 35% gross margin. With PLI and without PLI also, it's close 33.7%. On standalone basis also, 33.6% gross margin on without PLI, with PLI, and 32.3% gross margin without PLI. From gross margin lens also, we've seen good, strong performance in last 4-5-6 quarters. Basically, also from third quarter, if you see from third quarter last year, we have seen we have gone far ahead, and we have seen good gross margin EBITDA improvement. We also this year we have seen a good rain, good crop, and raw materials supported us being all key purchase and edible are also softened. This has also played an instrumental role in improving gross margin. On timely basis also, we have increased the prices of key ethnic snacks as well as special snacks. In last 2.5 quarters, we increased prices to 2.5%. That has also helped us in regaining our margin back. From EBITDA lens, overall from consolidated basis, we have touched EBITDA close to 14.8%, and without PLI 13%. Close to 15% EBITDA with PLI, and from standalone basis also, we have just close to 15.8% EBITDA with PLI, and close to 13.5% EBITDA close to without PLI. From standalone lens also, we are touching close to 13.14% EBITDA. This quarter marks the instrumental achievement, like we have also done JV with initiated and taken approval from board for JV with one of the biggest group in Nepal. That strong partnership building capability and talent. Basically, Nepal 3G Group is one of the biggest company in Nepal. They have one of the best distribution, and we see Bikaji being there with partnering with them they will take a great market share in Nepal in coming years, and we see good business coming on in next 3 to 5 years.
Besides this, as we said that now we would be in a distribution game, we have added further about 15,000 outlets in last 3 months, taking our direct coverage to 3.26 lakh outlets. In terms of our marketing initiatives, as we have committed and budgeted 2%, in line, quarter one is relatively a low spend quarter, and quarter two becomes a very high spend quarter for our marketing spend. That continues our investment on digital marketing, which is social media. That's on, and we were there all across. Also, this has been a quarter where we've initiated certain NPDs which are there in the pipeline and have very recently got launched. People talk about the healthier snacks. The millet bhujia, right? This brand extension of our Bikaji Bhujia, millet bhujia is what we have launched this quarter. Talking about our growth, overall volume growth is 7.5% for the quarter. Revenue growth 14.2%. Ethnic snacks, which is our core category, has grown at 11.2%. Packaged sweets, which looks pretty low at this point in time at 3.1%, but this is a seasonality, business. Therefore, which is going to get recovered in quarter two. And so is Western snacks at 4.2% revenue growth. Papad, a small category, and we pick slow only, which is at 5.8% growth. The way we look at our business, which is core, focus in other markets, core has grown at 8.5%, focus market at 11.5%, and other markets is at 26.5% growth. Exports has done extremely well with a 60.3% market revenue growth. In the last quarter, our family packs have grown by far higher than the impulse pack, which is 5 and 10 rupees pack. The family pack has delivered a 15.8% growth, whereas impulse packs are at 8.2%.
From top line lens, we have touched top line of close to 653 crore rupees at growing at 14.2% compared to last year. And overall, from quarter basis also, we're growing at close to 7%. Versus EBITDA from FCF from last quarter, we're growing around 30% from EBITDA lens and touching 96 crore rupees EBITDA in this quarter. That's all from the presentation. We are happy to take all the answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Avnish Roy from Nuvama. Please go ahead.
Yeah, congrats and it's a good recovery in both volumes and margins. The first question is on the family pack versus impulse pack. Family packs are growing 2x of the impulse. Generally, we see in FMCG that currently, although there is some recovery in terms of the urban demand initial times, generally downsizing is happening and smaller packs are growing faster. Is this a conscious effort on your side that you're offering more value to customer at family pack? Because impulse packs are very important from a recruitment purpose and for overall market share purpose. If you could clarify any one-offs here and how have you seen the market leader, have they also seen family packs grow faster than the impulse pack?
Thanks, Avnish. To the question, if you look at the small pack or the impulse category pack, is not that they have grown slow in terms of category. It is what we could have done better on the impulse pack side. That's one. Straight to your question. Now, the reason for that has been that there has been, what we have witnessed from the market, that lots of small and local players. Huge discounting and all that stuff has happened in this 5 rupee pack primarily, and which is what has helped the category grow. But from us, in terms of our conscious call, we didn't get into those price wars and all that stuff, which is also on the back of, if you look at relatively low growth on our Western side. But how we see is that come this quarter two onwards, this should get back to normal. Not that we have done differentially high on our large packs. It is by virtue of our brand strength, our distribution, and our availability across channels that the momentum continues.
One clarification here. It's mostly regional players which are more aggressive in the Western snacks, or even the Pepsis of the world or ITC. And second is Western snacks is around 10% of your business, broadly 9.2%. So is that Western snacks is mostly in the 5 and 10 rupee pack for you?
Yeah. So Western snacks is yes, primarily 5 and 10, and we also do have large packs for modern trade and all that stuff. But then that's a limited space in that stuff. So 5 and 10 is certainly baked into it. And in terms of your question that the large players, which is in likes of Pepsi and ITC, so if you put together these two companies, their market share in say Western snacks would not be more than 50%, even less in that stuff, right? So there is a huge room, and that's where the regional and local players play pretty strong.
Understood. My second question is on the three laggard categories. In your core business, which is 76% of your business, ethnic snacks, you have done quite well. In the three smaller categories, which is a bit counterintuitive, your growth is below 6%. You did explain the Western snacks, and you said it will come back on track. In packaged sweets and papad, in the new states, is this a focus area? For example, in focus states, are you also driving packaged sweets and papad? Generally, what we are seeing, these two categories are a bit volatile in number. I understand packaged sweets is linked to the festivals and marriage season. But is there a drive to take this to new geographies, or it's in the existing geographies only where most of the business continues to remain for these two segments?
No, so papad goes everywhere, and so are the sweets. We've been calling, and we take pride in saying that we are the second largest papad manufacturer in the country, handmade papad, after legit papad. So this is not just in the core states, this is across the country and even in the exports market, right? But it so happens that papad, again, during seasons and the wedding season, so the demand of sweets and papad goes obnoxiously high during these wedding seasons. In fact, in the times we have witnessed that we run short of capacity for papad, most importantly. This time, what has happened is that the number of wedding dates or the weddings were less than what it were in the last or previous year. So therefore, it's reflecting in papad. Sweets is a matter of time, and as Rishabh just spoke, you'll see surprising number coming in Q2 sales for sweets. So immediate recovery will be.
Sure. Last question. So Nepal, why do a JV? Almost every Indian FMCG company is present in Nepal. You don't see too many JVs. Why not go 100% on your own? Second is this 5 crore loan which you have given to Bikaji Bakes. Could you clarify on that? What exactly is this business? And lastly, on the 2 store addition which you have done, from 13 stores quarter-on-quarter, it is becoming 15. So if you could discuss, is this basically your acquisition Hazelnut where you have added, and any insights if you can share of your own store, how they are doing, and Hazelnut, are you happy now because 2 quarters have gone? Because generally most retail companies in the QSR space are not seeing good times at all, except maybe Domino's, one exception. But broadly, this space is extremely challenging currently, and if you see the software job addition also, TCS has delayed, and overall job addition in IT sector is low. In that context, would you slow down your store addition in Hazelnut and in terms of your own store?
Yeah. So we'll take your question one by one. So starting from your first question, which is on JV in Nepal. So Bikaji as a brand is pretty old and pretty strong in the Nepal market. But the challenges what we were facing was that there's huge custom duty or the import duty which was there, and which was making our product non-competitive. So that was the reason that we thought of having a JV and eventually start producing there and selling there. So that will make our product much more competitive and will leverage the brand strength what we have. Talking about the JV company, which is CG Chaudhary Group, who owns YY brand, and this is the highest distributed Maggi or FMCG brand in the country. So that's what we are riding along with this CG Group. And we see a huge growth potential initially just by making our products available in length and breadth of the country, and second by their clout and their strong presence in the store. So that's the sole objective of having this JV exclusively for Nepal market. Now talking about the loan and the other stores, I would hand over to Rishabh.
So from in this quarter, we have added 2 stores in THF as an especially. So basically, THF is doing extremely well for us, and we are largely satisfied with the performance what they are doing. And this year they will open close to 8-9 stores more in next 9 months. So they will open a store in a month's size, like. So by the end of this year, they will be having close to 19-20 stores, and largely in UP and NCR area. So we are then the number on in last 6 months they opened store, and we are seeing good results coming in each quarter, each retail outlet. So we are seeing good numbers versus and as well as profitability at overall level in retail also in THF, and we are largely satisfied with the investment what we have done. And from Bikaji lens, we opened 1 store in Rajasthan this year, and we'll open 3-4 stores more in pipeline. And we are also seeing good results coming in from them. So from retail lens, so we are not pure proper QSR. We are into our major focus in each retail chain is into packaged namkeen, packaged sweets, gifting that contribute big numbers in our overall QSR. Like you see in Bikaji also, like we are operating in Bombay where close to 55-60% sales come from gifting sweets and our packaged namkeen bhujia, where we display complete range of Bikaji products. So that's a major focus for us in in our retail QSR outlet. So that's number one. And number two, from Bikaji Bakes lens, it's a 100% subsidiary of Bikaji Foods, focusing on making some bakery items. We are already into biscuits, and a small portion of us are into biscuits. But yeah, bakery is doing good in India, and we see good potential. So that's a small investment what we'll do, and we'll focus on doing crozo and everything. Small bakery investment. That's what we are doing.
What brand and mostly e-commerce for bakery?
Mostly e-commerce, yeah. Mostly e-commerce.
What brand? Bikaji brand?
Yeah. It's early to say, but yeah, we'll come. Sorry?
Yeah, you are saying something, you'll come back.
So what exactly, of course, currently it's in Bikaji brand. That's all.
Understood. One last follow-up and I'll end there. In terms of CG Foods, they do have a reasonable presence in some states through YY noodles. Through a non-equity, I'm not asking on equity partnership in India, through a distribution synergy in terms of YY noodles and Bikaji getting distributed in some of the Northeast, etc., is that a possibility? Because they do have some reasonable presence in some states.
We are having very strong presence in Northeast. In Northeast, we are holding plus 55% market share in Assam, right? So we hold a very strong position, and we don't see any collaboration in India as of now. It's just a Nepal baby.
So thanks, sir. That's all from me.
Thank you.
Thank you. The next question comes from the line of Nitin from MK. Please go ahead.
Yeah, thanks for the opportunity. I basically wanted to have more insights around month-on-month demand recovery. Can you throw some light? And additionally, like you have answered to the previous question around some of the markets that discounted players have emerged. If you can call out any specific market, and you are hopeful that in Q2 things will be back. So how those scenarios are emerging? Can you please help on that?
So we have seen good demand recovery in the last 6-7 months. Like you've seen Q3, October, November. This quarter was tough for us and for the industry also. But from Feb onwards, we've seen good recovery. Like April was little dull because we didn't good. So March was good for April, but May, June, July, we've seen good month-on-month recovery in demand. And being we are entering into festivity, we see good demand recovery across each state, each core as well as focus state in our overall PT.
Okay, thank you. And in terms of this discounting which is going on in part of your portfolio and recovery in Q2, how you are confident that the discounting will go down, or are we taking some actions here?
Can you please, we're not clear on terms of discounting. What is the exact question there?
No, so you were highlighting that, like particularly Western snacks, there have been
okay.
huge discounting. Yeah.
No. Okay. So I think it's not about discounting. It's about their selling price. So they offer lots of offers and all this stuff, right? So what happens is that these are the mushrooming kind of stuff. That's not sustainable. And which is what, so we'll upweight our rupees 10 and all that stuff. But yes, we certainly will not go the discounting way or trying to match prices and all. That's what we'll never do.
Okay. Thank you. And my second question is around your gross margin recovery. Adjusted for PLI, it is at around 34%, which is a healthy level. There is a sequential recovery of 225 bits. So can you help me understand the factors which have aided gross margin recovery? And also a comment around sustainability of the margin ahead would be helpful.
So basically, it works both ways. Like we also increased price in last 2 quarters, and also raw material has supported us. So in both ways, it has worked us in our favor. And also we done some saving program in the organization which is running for last 9 months, and so that's where we are majorly focusing on few products which are high in gross margin. So multiple things are going on to improve the gross margin. Currently, we are at close to 35% gross margin at control level, but overall at standalone level also we are at highest gross margin, and we see that in next 9 months also we'll be at the same we'll be maintaining the same gross margin what we see, right? Unless we see any major disruption in our edible oil. But we will in next 3-4 months we've seen good crop, good rain. In our core state like Rajasthan, we have procure major raw material, and we've seen good rain this year. So we don't see any major changes in raw material prices what we are buying currently.
Yeah, this is helpful. And one last thing in terms of your presentation, when you highlight raw material prices, so this is the spot prices you highlight, or is it like consumption price? The indexing you provide.
Consumption price.
Okay, so that way, like palm oil prices was, for my calculation, was around 131 rupees in Q4. That has seen a moderate correction to 128. Right. So whatever the duty decreases and the easing in palm oil prices has not benefited us.
So it will be, so we've seen Q2 something because we had some stocking has been done. So we've seen Q2, but yeah, raw edible oil price will remain at the same level. We don't see any major changes because the duty and demand is good this year. So we don't see any major correction in edible oil. It will be at the same, largely same level what we are seeing in Q1.
Okay. So you don't think that whatever the duty reduction have happened, that will flow into the numbers? So palm oil prices basically will stay here and the margin.
Palm oil prices came down, but we use multiple oils like palm, cotton, rice. And so palm has reduced, but other oil has not reduced much.
Okay, got it. This is really helpful. Thank you.
Thank you.
Thank you. The next question comes from the line of Mrunmayee Joglekar from Asit C. Mehta Investment Intermediaries. Please go ahead.
Hi sir, thank you for the opportunity.
The line for the participant has disconnected. We'll move to the next question. The next question comes from the line of Vishal Dudhwala from Trinetra Asset Managers. Please go ahead.
Hi sir, am I audible to you?
Yes.
Yeah, so I just have one question about your second half of this year. Like with Diwali and the festival season, like rural post-harvest demand and anticipated easing in commodity cost, what are your key volume and margin assumptions for H2?
So if we look at Diwali and when you talk about this, so this primarily gets covered broadly in Q2 and then the leftover would be Q3, right? So gross margins, the way we look at, the guidance what we have given, we will stay within those numbers.
Like any new festive SKU launches you are piling up in your plan on that?
No, so nothing as such. It's about our gift boxes. So every year we come up with some new designs. It's the assortment, different packs and all that stuff. But otherwise, if you talk about any new category, no. The packs, you will see some better design, some little bit change, tweaking in that stuff. That's what we certainly do to keep up the excitement and engagement of the customers.
Okay. That's it from my side as of now. I will wait in a queue.
Thank you.
Thank you.
Thank you. The next question comes from the line of Darshit Vora from Asit C. Mehta Investment Intermediaries. Please go ahead.
Hello.
Hello.
Hi. Am I audible?
Yeah, you're audible.
Yeah. All right. Thanks for the opportunity. I have a couple of questions. First thing being that what is the timeline and what kind of internal target are we expecting for the volume to come up to double-digit levels? We've seen about 3 quarters of single-digit increase. Any visibility over that?
We've seen good demand recovery across month-on-month. For the rest of the year, we see at least 9-10% volume growth. That's the plan. That's numbers we are looking at least.
All right. 9-10%. That would be more towards the second half?
More towards from quarter two onwards.
From quarter two onwards. All right. About this Nepal JV that we have done, can you give some kind of details with respect to, say, capital outlay or some kind of a timeline for the ramp-up of distribution or some kind of revenue potential that we have in mind?
Yeah. Basically, from Nepal perspective, we'll jointly open a plant in Nepal, where we'll invest close to 30 crore rupees jointly. 15 crore rupees will be outlay from Bikaji and balance will be from there. It's equal 50-50 JV. Currently our top line is under 20 crore rupees, and we see good potential as the brand is very strong there. Overall, due to custom duty and all, we're not able to supply in Nepal market. We see good potential coming up and using and driving distribution of CG Group YY. We see at least 50 crore rupees top line in the next 2 years. That's the target for 20.
50 crores of top line in the next 2 years?
Yeah.
All right. Finally, just from my side, in the previous quarter, you had mentioned that our margins were gross margins were expectations of around 30-31%. This time around, we've come at 33+, and we hope to maintain that sustainably in a way. How do we plan on doing this given the already taken initiative?
On full year basis, what we see that on standalone basis, we see at least gross margin of 32% plus. That's the target what we're taking on standalone basis without PLI. We are on track of doing the same.
All right. That's it from my side. Thank you.
Thank you. The next question comes from the line of Shirish Pardesi from Motilal Oswal. Please go ahead.
Hi, Manoj, Rishabh. Thank you and good afternoon. Just quick question on the Nepal. The per capita consumption in Nepal for meals is about 7 kg. Do you have any data? Because I do understand YY is practically about 100% distribution. It's a very strong noodle market. In that context, you might say that you have the right to win. I was more curious, what is the namkeen or maybe non-Western snack kind of consumption, if you have any data to support?
Hi, Shirish. Nepal, as such, we don't subscribe to Nielsen data, so would not be able to answer in this straight one number. Certainly what we can tell is that looking at the market and visiting these stuff and all, this seems to be clearly about 600-700 crore market kind of a stuff, right? That's what we look at it. When we look at competition and primarily from these Indian manufacturers such as Haldiram, Bikano, they're pretty much strong there, and there's a consumption base there. That's what we see. When we look at internally, simply put, currently our distribution was lacking. We were more towards India border side. That's what was it. Now if we were to go up Nepal, that one is the transport cost, which makes things expensive. And second thing is that someone is to build a route to market. So the objective of this JV is to leverage on their route to market and brand, which is already established brand, push that brand there. So that's what it is. And as Rishabh said, in terms of our business opportunity, we can more than double in next 2 to 3 years time.
That I understand. I was just more curious because in the press release you have said that you will manufacture, trade, and do the marketing spends. So obviously, you should give some number that there is an investment of 30 crore. But then is manufacturing is going to solve the distribution problem? Because if the market is very large and if there is already established players which are there and you have been selling some quantity from India. So I was more curious, what is the number which the 50 crore number on the prime office looks very conservative. But then if you can tell me what is the export business we have done in FY25 to Nepal?
Yeah, so that's what I'm, to your question again, Shirish. Let me bring to the table, the import duty is 55%, which makes you less competitive in those markets. So this would help us ease down on those numbers and therefore ability to invest behind building a business goes as much. That's one. Second is, if you look at Haldiram has also gone the same way. They have also done a JV partnership there, and so is what Bikaji. So top 3 players from India are these 3. So they they've started or about to start. That's what is the status.
Okay. Coming back to India business, just quick question on the PLI. What kind of PLI you have factored in for FY26?
So for FY26, we have factored close to 50 crore rupees PLI in our books. So it will be divided equally in each quarter.
Okay. And just last question on Hazelnut. What kind of revenue momentum we can expect exiting quarter 4 in this year? Because obviously there is a lot of learning.
So quarter 4 will be type of 100 crore ARR. That's what we'll see.
Okay. And any color, because now you're settling down for margin exit, when you do 100 crore, what kind of gross margin you would achieve?
So this year will be a lot of expansion. So major focus will be driving growth and driving opening stores this year. So maybe next year will be 8 to 10% EBITDA. This year will be largely 4 to 5%, 4 to 6% type of EBITDA.
Okay. All right. Thank you, Rishabh, and all the best.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Hatim Brochwala from JM Mutual Fund. Please go ahead.
Yeah, hello sir. Thank you for the opportunity. Sir, my question is that currently all the input commodities are now correcting. So whether there is scope for us to cut on the product prices to drive volume growth?
Yeah, of course. I mean, we look at how competition is moving if we were to drive volume growth. So those are the measures as a business and as the steering committee in our company, how we look at it. So we certainly evaluate and we keep doing these things as the commodity prices eases.
But is there an opportunity without impacting margins, I mean, current margins?
Of course. See, this we'll only do if we have that ability to invest. It is not at cost of margin. I mean, so there is a target of improving bottom line as well. So it is not by eroding margins and we give some extra offers. That will not. So as you started that, as we see the ease in commodity prices, that's what we will pass to the consumer. And we have done it in the past as well.
Okay. Thank you, sir.
Thank you. The next question comes from the line of Tuisha from Rare Enterprises. Please go ahead.
Thank you for taking my question. Am I audible?
Yeah, you are.
Yes, ma'am.
So my question is regarding your new product launches, in particular the millet bhujia. If you can please share any kind of commentary on how the market response has been and what you think the opportunity could be for this healthy snack segment, and if you have any more healthy snack launches in the coming quarters that you've planned. Thanks.
Yeah. So I think it's too early to comment on this millet bhujia because it has just come out, and so we will be doing some pilot stuff and will be riding on these Q1 channels and all that stuff. Distribution would get built over a period of time. But the primary data, what we can say is that when we launch, so there's a huge product testing what we do, and it has come out very well, and that's what was the panel and that's how the panel gave clearance to launch it. Talking about the healthy food, so one is there's nothing called healthy food. You may say healthy snacks. You may say less unhealthy. That's a better way to put that stuff. So we also have a range of products which are roasted namkeens and all, healthier namkeens and all. But the market still is very, very niche. So as much voice what we hear about healthy snacks, if we go down the consumer, that in Indian market at least, it is not as much there. I think it'll take about 5-7 more years. That's when people will be talking even more about the healthier snacks, and companies would then start focusing on that stuff. But to be future ready, we have a range of products which are amongst the healthier ones.
Okay, sir. Thanks. That helps.
Thank you. The next question comes from the line of Aditya Tambi from Haverock Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So I just wanted to get some updates on the frozen food segment that you are planning to export from India. And there is currently the market leader which already does it. So any color on how it is happening, if we are able to get into stores or gain some market share?
Yeah. So on the frozen food, we do not sell in Indian domestic market. This is primarily for our export business. And this frozen part has a huge share of business in our export business. So there's upwards of 35%. That's where it is. And that also would have been better if we had our capacities earlier, because we were also outsourcing and stuff. So that's where it is. But the way we have built our capacity, and this again we call it being future ready. So as and when the country or the channels are matured enough to maintain and sell these frozen products, which needs end-to-end cold chain, that's when we shall be launching it in Indian market, but not in the next couple of years is what this would be export business product only.
Right, sir. So just to follow up on that, can you just clear on how the market is changing? Like if someone is already storing a competitor's product, then how do you convince them to go for Bikaji instead of them, or to keep both of them in their stores?
So today, if you look at any categories, the categories are highly fragmented, and you will see a lot of players playing around within the store itself. So their exclusivity no more exists. That's one. Now, how we'll do it is, one, in terms of course, we have to be consumer preference. So therefore, if your product doesn't taste well or the quality is not up to the mark, you will never get a repeat. What we also do is that we do some branding activation in these stores, which is the stimulus for a retailer to keep and place our product, give visibility of our product. Third is that the clout what we have. So in the stores where we already are selling Bikaji products, this becomes an addendum to the list what they have. So this is how we go about it. And also what we realized was that many a times we ran out of stock. I mean, we was not having ability to supply the orders, because we were also outsourcing. During the season time, if you look at, that's where the demand is highest there. And in the yesteryears, we were struggling. Now, if you see, and numbers speak louder than what I would say. If you look at our Q1 export business growth is outstanding, and this is what has helped us deliver.
Right, sir. Thank you for answering. Also, sir, on the hazelnut factory acquisition, like you already alluded that we are adding one outlet per month. That is what we see. But how do you see this over 2-3 years of high-risk phenomena? Do you see this as only as a tier one opportunity, or do you plan to scale this up faster, or like after this year, we might go lower on these store additions. How do you think about this?
So store addition we'll continue to drive on our direct coverage. What happens is that may not translate into indirect coverage because it will be a diminishing return beyond the point. But when you cover directly, your clout on the store or ability to sell rate is always high. So what we're looking at it is that now currently we are at 3.25 lakh outlets. The target what we have is to exceed 3.5 lakh outlets by end of the year. But year on year is what we shall be adding 50,000 outlets. That's what is the target what we have for ourselves and should reach to 500,000 outlets in our direct coverage. That's the target what we have in next 3 years.
Right, sir. But so also on the hazelnut factory, the acquisition we did. So what about that store addition?
So from hazelnut lens, what we see that this year is a major expansion, what we've done, what we'll do this year. But from next year onwards, they will open 500 stores every year. That's the target.
Okay. Thank you. And also, we were focusing on our focus states. So, like, do we have any updates, like, if there were any market share gains, like, if we could see some wins in these focus states, like any market share gain that happened over last 1-2 quarters?
So, across all 6 focus states, there's a movement upwards of market share gain across states. What happens is that and so is the numeric distribution as well. So both these metrics has moved up. There are certain states which are now close to 6% market share as well. So 5.8%. For example, Chhattisgarh, if you look at, which is one of our focus states. Karnataka, if I speak about, is upwards of 3% market share. So there are certain movements, and so nowhere have we seen that it has not slowed, simply put.
Okay, sir. Thank you for answering. I'll get back into this.
Thank you. The next question comes from the line of Priyank from Belem Capital. Please go ahead.
Yeah, hi, sir. I'm sorry if I missed out the organic volume growth. I understand the volume growth excluding acquisitions.
Sorry, the voice is not audible.
Hi, sir. Is it audible now? Hello.
Yes.
Yes, sir, it's audible now.
Cool. Sir, sorry, I would have missed out. What would have been the volume growth excluding the acquisitions in the standalone business? Would it be 5.5?
Close to 6%.
Close to 6 now?
6.
Sure.
Close to 6%.
Sure. So the research, the additional, I think the extra offerings that we had even last year would ease out in the base by September quarter, right? So till that time, the volume growth would undershoot whatever aspirations we always had about 12-13%, right?
Right. So last year also, quarter 4 of 25, we have seen full volume growth of 10% extra that what we are in. In quarter 1, we started slowing down. So from quarter 2 onwards, we will see good volume growth. Because in quarter 2, there will be no extra drainage in last year number.
Understood. No, because till September quarter, we had a 15% volume growth, and I was assuming that there would have been...
Yes, you are right.
Even a few things. Yeah. Cool. So for the full year, for the first half, we would have a mid-single digit volume growth, and for the second half, the aspiration continues to be double digits. Is that what we should see?
Yes.
Got it. And the question on the operating cost, when we look the total operating cost in terms of per kilo, how should we model it out for next 2 years? What should be the trajectory given the distribution reach that we are expanding, given the size that we are reaching? What should be the operating cost per kilo trending going ahead?
So basically, we don't see business as a operating cost per kilo year on year or month on month basis. We see as a key cost. We measure key cost, like logistic cost is big for us, employee cost is big for us, and manufacturing cost. So we see each cost is a big 5-6 points are there which are big for us from cost perspective. and we are majorly focusing on bringing more efficiency in each cost length. So currently, we are in the expansion phase. So be it in employee, we had a lot of addition in employees as well as frontliners in sales in last 2 years. And the result we have started coming in the last 2 quarters, and we'll see a lot of improvement in employee cost as well. Number two, so manufacturing cost, we are doing a lot of energy. We are moving to solar and everything. So we'll see efficiency in each cost measure. Plus also, we are currently close to 50% utilization. So running plant with lower shift or lower utility is always a costly affair. When we have fixed employee costs, all costs are fixed. So once we start raising this capacity and take this to 70-75%, we'll see at least 0.3 to 0.5%, 50 basis point improvement in margin every year for next 2-3 years.
Sure. So I mean, I understand. We just have, you have multiple cost line items, but if I have to look forward for a total other expenses, excluding employee cost, is somewhere around 14-15% of your sales.
So it will be.
There are multiple. I understand. Yeah.
So what we see at least, it will be improving 0.5 to 50 basis point each year. So from other expense lens, you will see there are like a few costs which are sitting in like consultancies or many other third-party costs and third-party manufacturing costs, which we'll see improving in coming 2-3 years.
And for this year, should we consider 50 bps or starting 27 only we should consider 50 bps?
Starting 27.
Starting 27. Okay.
Yeah.
Yeah, sure. Clear. Thank you.
Thank you. The next question comes from the line of Dharmil Shah from Delmis Capital Management. Please go ahead.
Hi, thank you for taking my question. The first is on the competition. You mentioned that whenever the raw material price increases, largely from the local players. So just wanted to understand, are these the unbranded players which compete in such situations, or these are the regional brands that primarily compete with you?
So these are primarily local and regional brands. So it will not be a national player's role in that term.
But not the unbranded ones, right?
No, so unbranded also. But unbranded is what you cannot measure. But the data what you get is for the local and regional players. So you see their presence, their discounting much higher than what it used to be earlier.
Understood. Coming to other states, I mean, I know it's a very small part of the overall business, only 10% of the total business. Which states specifically are moving at fast rate, and is this growth, I mean, what is the growth driven by primarily?
Sorry, can you please repeat the question?
For the other states part of the business.
Yeah.
I know it's a very small business right now, but what states specifically are growing within all the other states?
So in fact, when you see the kind of growth what we've delivered in other states, it's a game of all states doing well. But yes, to your question, it's like West Bengal, like Maharashtra, Gujarat. These states have done very, very well.
Understand. This is primarily because of increased direct outlet coverage, right? Or is there something else?
In the other states, our strategy is that we are riding on modern trade, we are riding on e-com, that's what it is, and then we are riding on, we make physical stockist distributors, and they drive this distribution there.
Understood. And lastly, very broad question, but there is a lot of buzz around obesity drugs in India as well. These are very pricey drugs right now, but once these are made accessible to the mass population, we think snacking companies would have a long-term risk in terms of changing consumer trend, maybe over the next 5 to 6 years.
So we will take it as it comes, but for now, if you look at as we export to several countries, and countries like US where these laws or the statutory requirements are even more stringent, and we abide by all of them. So we are actually ahead of time. But I mean, if it comes, it will be true for us also, and we'll live up to whatever is expected in that case.
Thank you.
Thank you. Thank you. Ladies and gentlemen, we'll take this as the last question for today. I would now like to hand the conference over to the management for closing comments.
Thanks, Hazel. Thank you, friends, for taking time out. Hopefully, we answered the questions to your expectation. Just in case if you feel any of the question was not well explained or does not bring in the clarification you were looking for, please reach out to us. We'll be glad to take the questions separately as well. Thank you once again. Bye.
Thank you. On behalf of Bikaji Foods International, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.